The rate of change has been pretty incredible.
Nicole Pullen-Ross leads sports and entertainment solutions in private wealth for Goldman Sachs.
Whether it is the growth in women's basketball, starting from college through the WNBA, or whether it's the valuations that we're seeing across various leagues, or whether there's the viewership that we're seeing, all of those things have converged in a way that has led our clients to think, I want to have exposure. I want to participate in this growth, both from a passion perspective, but also from a profitability perspective.
As big as investing in sports is today, it wasn't always that way. It grew out of agents representing athletes and the related businesses that grew around them. George Pyne was one of those at the iconic IMG and watched the private equity business grow around it.
When you kind of take a step back and you look at sports, it's primarily been run by, governing bodies and families, and they were very conservative in the application of capital and the use of capital. And so therefore, outside sources of capital didn't see this as a viable entry point. But as time has gone by and the media rights have increased in sports and the audience and the avidity of sports have increased, so has the value of the teams, so has the value of the industry, and so has the opportunities within the sport.
Early in my career, I was involved in one of the sort of archetypal sports businesses, IMG Worldwide. My mentor, Ted Forsman, acquired in the early part of the aughts.
Josh Empson is another IMG alum. He is now the new co-head of sports at investment and advisory firm Sixth Street, owner and investor in sports teams such as FC Barcelona, Real Madrid, and the San Antonio Spurs.
And the fascinating thing about the history of IMG is that the founder, Mark McCormick, was effectively the financial advisor for Arnold Palmer and then Jack Nicklaus. And as he looked at this, he realized that Palmer and Nicklaus were the value, not the league, not the tour that was organizing them. And McCormick realized and built that entire business, which became a multi-billion-dollar business, on the idea that they could be their own brand. They could bring the unique value to events. And I think that actually allowed, in some ways, gender parity at an earlier stage. And I think a lot of that is about the sponsorship ecosystem, right? That they didn't have to win just on the court for the purse. You could find someone, whoever was the charismatic number one in the world in either sport, could command a global audience for the period of their ascendancy and monetize it.
Sports and investing in sports have come a long way from the days of representing Arnold Palmer and Jack Nicklaus in their size and scope, including geographic scope. Yield Street estimates the sports universe to be a $500 billion market worldwide, with revenue coming from media rights, ticket sales, licensing, and sponsorships.
So sports aggregates millions of people in a way that nothing else does. The Super Bowl had 126 million viewers. There's very few things in America that bring 126 million people together. And then you have people that are passionate, like Philadelphia Eagles fans. So you have big audiences in a world that's fragmenting, that zero in around something that they love and have a passion for. That's what makes sports unique. And then being more global. So for all of those reasons, sports is becoming more and more attractive. And it wasn't that complex or sophisticated 20 years ago in terms of capital markets.
It's bigger and broader, but what is it that investors are looking for when they seek to own a piece of the sports pie?
It really ranges. I would say some of our clients who are long-term investors in the space have been investing as a private family for generations. And those families have really leaned in mostly around passion. And we're seeing them look not only to the sport that they may have started with, but look at multiple sports, potentially in a same city or potentially across the world. And we see new investors who are trying to put a toe in the water. And they're doing that through some of the many growing number of private equity and institutional investors who have exposure to the space, or they're doing it through a minority interest.
It seems to me that owning a team might be a very different investment from having a minority interest in a team. Are they really different investment propositions?
They cost a lot more, that's for sure. The average NFL team, for example, when the CBA was signed, was worth $1.3 billion or something like that. Today, the average team is worth more than nearly 1.5 times that value. And so, although there's been a lot of growth of billionaires, that's a much smaller list today than it was 20 years ago. And so, when individuals are coming together to invest in this space, they're very much doing it in partnership. What they get for that investment varies significantly. It could be great seats, good parking, really increased engagement with the team. But in many cases, it's not control, it's not the ability to direct where the team is going. So there's a very big difference between majority shares and minority shares.
And it's not just team ownership, in whole or in part, that provides sports businesses to invest in. A host of ancillary businesses have grown up around teams that can provide attractive investment opportunities, which is at the center of Pyne's private equity business.
There are different ways you can look at sports today. So the traditional has been investing in teams or leagues, which are very safe investments, typically illiquid and the longer holds, but have a certain return threshold. So we've invested in data companies, we've invested in webs, apps, and streamings. I own a company in Amsterdam that lights the pitch and creates a software so we can predict on the pitch or the field whether the moss is going to grow, what the conditions are. And you know, as the media rights go up and the team valuations, the pitch is the quality of your product and the safety of your product.
I think the revenue landscape and the diversity of revenue has certainly grown over the past several years. You talk to team owners about having the best experience for their clients and their players. And then there's everything around the stadium or the arena. The ability for investors to participate in the revenue in the surrounding area has certainly been important. We have seen a community impact. A lot of the owners with whom we work talk about their investment in their team as a community investment, a civic investment, because they are prominent players in the community.
But given the dramatic expansion and diversification in the sports business, is there a danger of dilution?
Typically, when I think about value, I think about supply and demand. But it seems like there is an unending new supply of sports. How can it be that the value keeps going up when there's more and more supply?
People are thirsting for great storylines, right? And of course, there are sports, Formula One. Think about UFC, didn't exist almost 20 years ago. Look how popular that is today. So there are sports that can break in ways that nobody ever envisioned. And of course, women's sports has a traction today that it's never had before.
Is expansion your enemy as an investor?
I think expansion is your enemy as an investor, but it's really more your opportunity. And that's because every time you expand, you light up fandom in a new market. Was Las Vegas a big hockey market before the Golden Knights? Probably not. Is Las Vegas or Nashville now a pretty enthusiastic hockey market? Yeah. If you look at the historical returns in sports, they've been surprisingly good. And some of that's been driven by scarcity, but not necessarily scarcity of franchises, because all the leagues have expanded through this, but just a scarcity of other forms of content that are as engaging and energizing to such large fan bases. A fan is the value. And if you come in and you're not investing in a way that's going to grow the value proposition for the fan, and that can be through upgrading the venue, it can be allowing the team to be more competitive.
Sports competes with every other investment opportunity, and its status as an alternative investment doesn't stop it from keeping up with the main asset classes. Sports franchise valuations have outpaced the S&P 500's returns, especially in the past decade. But sport is a very different beast in a very different jungle.
As we look at sports as an asset class, how does it differ from other alternative asset investing?
You know, nobody's ever asked me that. It's a great question. I think one thing that's really different about sports as an asset class versus other forms of alternatives is the multiple layers of partnership. So when you invest in a sports franchise in the US, you have a partner who's going to be the control owner. And that's a person who has needs and ambitions that you're trying to support. You also exist within the framework of a league that has very particular rules and has its objectives and its goals. And then beyond that, and most importantly, you have this universe of fans, and they care passionately about their team. And they are stakeholders in that equation just the way the league and the owner is. And there is that implicit compact that if you're coming in, you're going to make this better for them as well as for the league and the owners. And it's interesting to be in a dynamic where you have those multiple layers of stakeholders and you're trying to deliver value as an investor for all levels of that. And that feels pretty different from other forms of alternative investment. It's pretty satisfying when you get it right, but there's something special about investing in something that you can watch every Sunday, that you can come together with your family and sort of share what you're trying to do. I mean, it was pretty nice to be able to have that day where, my son sort of said, "What do you do?" And I sort of could point to, what we do together on a Sunday. The Super Bowl this year was held in a venue that just had an almost $600 million upgrade to make for a better fan experience. Also help it deal with things like modern demands for a stadium around climate change. That's not a costless proposition. You've got to invest to do that. And in some cases, this can be billions of dollars. SoFi Stadium, in Los Angeles was a multi-billion-dollar project. And as you start to think about this going from the actual stadium to the area around the stadium and really creating a neighborhood around the stadium, the capital demand is just increasing, but so too is the opportunity to profit from it.
Alternative investing may be different when it's not your sports team. To what extent are your investors really looking for psychic benefits in addition to monetary benefits?
Yeah, it's an interesting part of the equation, right? So there is a joy element to the return that you can't necessarily quantify. And what we ask our clients to do is not just focus on the joy part of the return, but to think about the overall picture. And for some clients, that joy component is going to be at higher on the list of things that are important in the return. And for others, for institutional investors, it's lower on the list. And so making sure that we're helping our clients think through how to set return expectations for themselves in terms of liquidity, et cetera, is something that we feel is our opportunity to do to help them navigate this space. Alternatives in general are an area of significant interest for our clients, and the type of exposure that they're interested in is quite broad. And so this is only a piece of that for most of our clients. For some, they really want to lean in and look at this as a primary investment